All right. Hello, everybody. Welcome to the webinar. We'll be talking about how to acquire businesses to make kingdom impact. So glad you guys joined us. I'm sure we're going to have several more joining us here. We have some really good registration for this. And anyway, excited you guys carved out some time to learn about this exciting opportunity. And also just super excited to announce the Generous Life's newest affinity partner, Acquisition Ace and Ben Kelly. In a minute here, I'll officially introduce Ben, and he's going to tell us a little bit about his story and walk us through what it might look like right now to purchase a business, one that is already existing, already profitable, and how to do it in a way that doesn't eat up all your time. Maybe it makes it a little bit easier than what you think it will be to actually be able to do it. So anyway, super exciting webinar today, and glad you guys could be here. Just want to introduce myself first. I am Greg Gless, founder of the Generous Life app. We're a nonprofit ministry, and our main goal is to help families get financially free and then show the world Jesus. And we want to just like the name of the ministry says, Generous Life, we want everyone to grow spiritually and grow in generosity and get healthier and healthier financially, and then to work together to make an impact even greater than what we ever could on our own. So would love you guys to learn more about us if you're new to the Generous Life. And the Generous Life, we make that happen. We do this by offering three main things. The first is courses. We have classes, events similar to this that will help you grow spiritually and also get healthier financially wherever you're at on your financial or spiritual journey. So if you're struggling, stable, solid, or you're, currently doing great financially, we have something for you to help you grow and take that next step. The second thing we offer is financial tools. These are tools, world-class financial tools where you can connect your financial accounts, get a one place, a one place to go and see all of your financial accounts in one view, get real-time feedback and suggestions to help you improve your finances. So you can get up and running in just a few seconds after you connect your account. So would love to help you in that way. And the third main feature is community, because we all know that we make better progress when we're not trying to do it on our own. If we're able to gather together with some of our peers, people that are in a similar situation in life, man, we can go much farther and much faster than we ever could on our own. So we have communities for different age groups, different income levels, whether you're married or not, kids or not, and also a community specifically for what we call kingdom builders, which might just be you, folks that are looking to um, grow in your influence in the marketplace, acquire businesses, and grow financially so you can be an even bigger blessing and get even healthier and healthier in your own finances. So anyway, this is a great partnership for us, this affinity partnership. And in general, when we as the Generous Life Ministry partner up with a business or a ministry as affinity partners, what we're looking for is a couple things. One is we want to work with organizations that are able to work with families all across the country. um, we're a nationwide ministry. We want to be able to serve the families all across the country, regardless of where they're located at. And then also, we want to make sure that they have a heart for being generous towards the kingdom. That really is what we're all about. So it really is amazing when we're all rowing the boat in the same direction. I believe it's really healthy for us to partner up with other businesses and other ministries that also have a heart for helping people to get financially free and then eventually showing the world Jesus. So we're excited to have a large group of people gathering together, getting financially free so that we can be more and more generous and do some really, really fun, large things for the kingdom. And before we dive in any further, I did want to just follow up. We do have a gift for the first 10 people that registered and joined today. It's a book called Giving Together, and it's written by John Reinhardt. He runs a ministry called Gospel Patrons, and he created this book to be able to help small groups, maybe a group of 5 or 6 of your friends, to be able to gather together and go through this book over the course of 6 meetings, whether you meet once a week or every other week, whatever it looks like for you, or online. But to be able to go on this 6 lesson journey of growing in generosity and giving together as a group. So we're excited to be able to give the first 10 people that logged in here a copy of that. So we might be reaching out just to make sure we get the mailing addresses right. But anyway, excited to get that in your hands. It'll be a blessing to you and your family. I know for sure. So anyway, without any further ado, want to go ahead and introduce us to Ben Kelly, the founder of Acquisition Ace. He's going to be telling us a little bit about his story, but just know he started his career working at JP Morgan and left that career to go and acquire his first business, and then several more later. And along the way, started Acquisition Ace to help, I think now over 350 different people go ahead and acquire their first business or their next business. So a lot of great experience, huge heart for the kingdom, and I think he's grown his portfolio now. And you can definitely share more about this, Ben. But I think you've grown it to where you're up to almost reaching that $1 million per year level for income, which is just amazing. And looking forward to hearing too how you're able to do that and still have time for your family and everything else. So anyway, Ben, go ahead and if you would, and just tell us a little bit about your story.
Awesome. Thanks, Greg. Appreciate it. Thank you guys for jumping on. I think that what this community stands for, the Generous Life community, is awesome. And when Greg first reached out to me, I was super excited to do something to not only partner with him, but also to give back and just whatever knowledge that the Lord has blessed me to do and do successfully, I can help hopefully pass it on to some others that might be interested in it. So, I'll start off with saying just kind of real quick what business acquisition is, because maybe some of you don't even know what I'm talking about when I say that. So, business acquisition is the strategy of going out and buying an existing business. Okay. So, we're not doing startups. We are looking for businesses that have been around for at least 5 years, preferably over 10 years old, that have a clear track record of being profitable, and they're in industries that are recession resistant. They have some level of recurring revenue, and they have some kind of barrier to entry, meaning like it's not easy to compete against them. They have something that gives them a special quality that makes it to where they have a good, solid footing in the industry that they're competing in. Okay. So that's what business acquisition is. So I got introduced to this. I'll kind of jump into my story a little quick. I got it, as Greg mentioned, I was working at JP Morgan, and my job at JP Morgan was I was in the private bank. So that means people that have net worths of over $10 million or more, they get invited into the bank so the bank can manage their money, right? And so I was on the team that was trying to get these people to bring the money into the bank. And when I started getting to know these people that were very wealthy, I started to see some commonalities. And one of them was that a lot of them were business owners, and a good number of them were acquiring more businesses. And I saw from the back end of what, when they acquired a business, what that was doing for their private net worth. Like they were growing their net worth by leaps and bounds every year, the more businesses that they were acquiring. So this I was coming into this thinking that all these guys and ladies made their money in the market, in the stock market, investing in real estate. I had no idea that a huge portion were doing it through this method. And so I looked at it and said, okay, how do I start? And I didn't have much money back then. And so it wasn't like I had a bunch of money sitting around. So I had to get creative, and I had to learn, how do I get started on a journey when I had a lot less than what these people had, but doing it on a very small scale. And so that was back now in 2019. And I did my first acquisition, which was a software company. I came in as a minority partner. I basically said, hey, I'm going to do all of this thing, all this extra work for you. I'm going to help you raise money. I'm going to help build your team. In exchange for doing that, you're going to give me a piece of this company. And the guy said, sure. And so that was my kind of first deal. I didn't really put much money up. It was like 5 grand. And then it was doing all this extra work. And that business, thank the Lord, did well. It grew 10x what it was doing then. We still have it to this day. We're actually in the midst of selling it this coming year. But that kind of got me started. And after that, it went into another web design company, into a nail salon, into ATMs, and into continue on down the road to where I am today. And I started Acquisition Ace, which is the community where I teach others to do this, about 3 years ago. So I got to the point where I started writing about it. People started asking me, hey, I would like to learn how to do that too. I started taking people on as kind of like a one-to-one consultant, and realized after taking on 6 or 7 people that it was way too much time was spent doing that, because everyone was just calling me every day, jumping on calls, and it just wasn't scalable. And so I had to figure out a way in which I could help people do this, but not be chained to my phone all day long. So I created a community, which has, just like Generous Life has, it has all these courses, it has all these different things that they can get into, templates, and then there's live calls every week where I'm teaching and others are teaching the different strategies. And so we did that 3 years ago. Fast forward now 3 years, we're hitting almost 2,000 students who have joined. We're coming up on 400 deals that have been done, and deals are getting done every single week now. So it's a lot. It's very cool to see people that have started out with no business ownership experience, getting into this strategy, working really hard, and 6 to 9 months later being in a completely different spot. And so that is kind of the story of how I got into this. Yeah, right back to you, Greg. And if you want me to go down the road of doing more details on business acquisition, let me know. But I'll hit it back to you.
Oh, that was awesome, Ben. And you mentioned kind of helping other folks on their journey to acquiring these businesses and the change that's making in their lives. Can you speak to that a little bit more? I have to imagine that's personally pretty satisfying. That's one of my favorite parts of doing this kind of ministry is the impact it makes to families. What
Yeah,
kind of impact are you seeing for families?
yeah, great question. And I think Greg mentioned this earlier in his introduction, where I've structured the way that I do acquisitions to where I can acquire multiple companies, but yet I'm not working the day to day, right? Like I make sure that for every company that I'm acquiring or getting a piece of, it then doesn't mean I'm working 10, 20, 40 hours a week in that company. And now that means I turned down a lot of deals, right? If I was just going out there for any good deal that made a lot of money, I would, yeah, I'd be making more money than I am now, but I also would be working triple or quadruple the amount of hours that I'm working. And so my goal is I have 4 young kids, all 6 and under. And my goal was, hey, I want to be home. I want to be able to see them, raise them up and be able to be involved in their lives, go to the school plays, go to do everything and not have to worry about, going into the office all hours of the week. And so that was my goal. And so the strategy that we teach is how to find those businesses where there is existing management in place, or we structure the transaction so that the seller remains in the business after selling the business for at least a couple years to run the business day to day, while we have time to look for someone else to then replace them after a year or two. And so that's the strategy that we implement. And so it's kind of a key tenet and core to what I do myself. And a lot of my students who come in are in the same place in life where they're married, they have kids, they want to increase income, they want to start to build financial freedom, but they don't necessarily want to buy another job, right? Which, if you don't do this correctly, you could very easily buy another job. And so that's the reason why the strategy works and kind of why people find it compelling to go and do.
That's great. And guys, I would mention too, if you have questions that you want to make sure get asked, drop those in the chat. I'll be sure to come back to those and bounce those off of Ben as well, or we'll be sure to get back to you at some point for sure to answer all your questions. But Ben, maybe you could tell us a little bit about, um, we've heard a little bit about this term called a silver tsunami, and maybe you can tell us a little bit more about what that means and what kind of opportunities available right now that's kind of unique.
Yeah, absolutely. And so the Silver Tsunami, it's a pretty catchy title, but it talks about the baby boomer generation that's retiring right now, right? So that's why the silver comes in, right? So it's the baby boomer generation is the largest generation in American history, right? And so they're at the retirement age between now and the next 10 years. So all the baby boomer generation over the next decade is retiring. And baby boomers own about 1/3 of all small businesses. And so it just goes to, if you do the connection, you have 1/3 of all small businesses and the owners are retiring. So therefore, they're going to have to, these businesses have to go somewhere. And 1/3 end up getting passed down to their children. 1/3 end up getting closed, meaning like they don't sell it, they don't give it to their kids, they just shut it down. And the other third sell. Okay. And so we're talking about 13 million businesses that need to exchange hands. Now, the cool part here, so that the tsunami is that typically there is a fraction of that. We're talking about a couple million businesses that are sold every couple years. Now that's going to be over 10 million, right? So that's a tsunami of businesses that are coming onto the market. And so that's why the term calls silver tsunami. Now, the part that provides the opportunity is that there are very few people like me who are buying small businesses, right? So most of the time, if a small business owner doesn't pass it to their kids or someone else that's in the business that's maybe working for them, they have a very hard time selling because there's not many buyers out there that are buying sub $5 million companies, right? Now, once you get past 5 million, get towards 10 million, yes, now you have private equity groups, you have institutions that are buying these companies, packaging them up in portfolios, and selling them for a big high ticket number, right? But below 5 million, those are too small. They don't give enough profit for an institution to buy because they have investors. Those investors expect a really good return, and there's not enough meat on the bone. So sub 5 million, you just have pretty much the only people buying those businesses traditionally have been a competitor, right? So if you have an HVAC company that is retiring and wants to sell, then the competitor HVAC company down the road says, "Yeah, we want to buy your customers," and they come on and they would buy that business. Well, there's so much deals coming onto the market. There's not enough competitors out there to buy it. So there's literally there's an imbalance in the supply and demand. And so I'm out there teaching people to be more like me. So I'm not an HVAC owner. I'm not a business owner in the traditional retail sense, but I know that there's financing methods and creative financing methods to be able to go acquire ownership in these companies and now receive cash flow from them. And so there's very few people like me, and there's a lot of businesses, which creates the opportunity set. So we can go in there, and anytime we're finding a business for sale, or maybe it's off market, so we're just talking to an owner and convincing them to sell. There's very little other people like us, so I might be the only one negotiating with them. There's no other Bens out there that are talking to them about buying them, so I have a lot of leverage. It's like trying to sell your house, and there's only one buyer out there, and you're like, well, I don't like your offer of, X, and you're like, okay, well, no one else is offering you any money, so I'm just going to keep on offering X until you decide to sell, right? And so that is where we have the kind of position that has more leverage than people typically think when they go about doing transactions.
That's great. That's great. And yeah, it's a once in more than a generation opportunity. It seems like this perfect time in history right now. And just in preparing for this, I came across or was reminded of, I guess I should say, really, of Deuteronomy chapter 6, verses 10 and 11. It tells a story of the Israelites heading into the promised land. And during that story, the scripture says, when the Lord your God brings you into the land he swore to your fathers, to Abraham, Isaac, and Jacob, to give you a land with large, flourishing cities you did not build, houses filled with all kinds of good things you did not provide, wells you did not dig, and vineyards and olive groves you did not plant. Just basically this idea that his people are going to walk into this land and things are going to be established, they're going to be a blessing, and they're going to be able to just kind of just take them over and run with them and let that be a blessing to their families and to their community and then to the things that God is calling them to do. And especially thinking about those vineyards and those olive groves, those sound to me a lot like businesses or ways to produce income and abundance for your family. And yeah, it reminds me of that a lot of what's going on right now in this time of history. And I'd love for our folks to be able to take advantage of this. Um, a quick question regarding the idea of going after established businesses versus starting a new business. Are there some stats around that? And after you acquire a business, are there any stats around how well those types of businesses typically do?
Yeah, yeah, good question. So, yes. So, I think what I don't want people to think um, when I'm talking about this is that it's wrong necessarily to start a business. I, all of us, I mean, back when before I did business acquisition, I tried to do a couple side hustles, start a little something here, start a little something there. You learn a lot doing that, right? And sometimes for some people, starting a business probably makes more sense. Now, when it comes to the difference between the two, though, when it comes to success rates, I can dive into some of the data behind that. So, if we take a time horizon of 5 years, okay, within 5 years, the average startup, about 92% of startups fail within the first 5 years. Okay. So that means 8% succeed. So after 8 years, out of the 100 companies started, only eight will make it past the 5 year mark. Right. So that's obviously those are not very encouraging stats. It means you have to be very, very um, uh, not just lucky, but you have to have the right time, right market to really get traction. When it comes to business acquisition, and doing it the way that we're doing it. So we're buying existing companies, profitable companies. We're not doing turnarounds. If we do it the way we're doing it, then there's about a 93, 94% success rate after 5 years. So it's the complete inverse of a startup. And at first, it might sound like, oh, that's too good to be true. That doesn't make any sense. How could it be that high of a success rate? Well, you got to think about it like this. Remember what I just said that in a startup world, 8% of the 100, 8 out of the 100 make it. So after 5 years. So we're looking at those eight to acquire, right? So these are the special ones that made it through the gauntlet, made it through the crucible, got to the other side, are profitable, they're growing. Those are the only ones we're looking at. So we're already looking at a subset of businesses that proven that they can succeed and they are profitable and they have traction. Okay. So now when we look at it, it's like, why is the success rate so high for those who in business acquisition? Well, we're only looking at the successful companies, right? And we're then those successful companies already have cash flow. They already have employees and management in place. They already have a product. They already have a service that meets a demand somewhere. And so you're not going in there recreating the wheel at all, right? You're just going in there and improving what they're already doing. Many times I tell my students once they do their first acquisition, don't do anything the first 3 months. Don't make any major decision. All you have to do is learn. Learn as much as you can about the business. And in the second, in the next 3 months, so 6 months in, that's when you can start to make small tweaks here and there because these are not turnarounds. These are businesses that are doing well. Now you got to figure out the leverage you can pull to pour gasoline on the fire to make them grow faster. That's what we're looking for. So we're only going after the winners, which is why 5 years later, there's a super high chance that this business is still going because it was already a winner to begin with. So that's why I wanted to give some context on that.
Yeah, that's awesome. That makes a lot of sense. And wow, talk about it totally flips the statistics there, doesn't it? Around success rates. And man, if you're thinking about this from a lens of, investing and putting your time into it, boy, I would always rather take those higher odds. That's for sure. Um, but yeah, when you're looking at those businesses, Ben, can you maybe give us an idea? Are there some key metrics or some key things about these businesses when you're evaluating them that you're looking for that kind of meet some criteria or not? How do you
Yeah.
filter through what's attractive to you or not?
Yeah. So, like I mentioned before, there's a couple things that we need to make sure are present before we take even the second step. So when we first look at a deal, we're looking at their like if you go online, and I'm gonna give you a couple websites. So if you guys are taking notes, you can put these. One is smbmarket.com. It's full transparency. I'm a partner in that site. I love it. It's a great way to search all the deals online. Okay, so it's an aggregator. So it searches the entire internet, puts all the listings into one place. So smbmarket.com. Another one that's completely free is bizbuysell.com. That's the most kind of the oldest site. It has a lot of traffic on there as well. So when you go on there, you're going to see these businesses that are listed by brokers for sale. And it's going to list revenue numbers, it's going to list cash flow numbers, when did it start? It's going to give you some biographical information. Now, when you look at the listing, there's a couple things I want you to do first. First is I want you to take the revenue number and I want you to divide the cash flow into it. And that percentage, we want that to be between 15 and 35%. 15 to 35% profit margin. Now, might be able to guess why I don't want less than 15% profit margin because obviously the margins get too skinny and you're going to be adding potentially debt to buy this company. Now I got to take that skinny profit margin and make it even skinnier. And that's not where we want to be. But why do we cap it at 35%? 35, if you have a business typically, and this is not for every business, I'll pay a caveat. There are some businesses that have a higher than 35% profit margin that are great. So I'm not saying don't look at it. I'm just saying be aware. Most businesses that are over 35% profit margin, the reason why they're so profitable is because the owner is doing all the work. He's not hiring out anything. So he's working 60, 70 hours a week. He's not hiring different managers. He's doing it all himself. So that's why he's making really good margins because he's doing the work of three people, right? Now, the second day you buy it, unless you want to do the work of three people, you're going to hire out different three people. And guess what? Now your margins are going to, they're going to condense back to where they should be, which is probably in that between the 15 and 35% margin. So that's what we're looking for. So we call it the golden ratio. Do that math. You take the cash flow, 100,000, divide it into revenue. Let's say it was 300,000. That would be a 30% profit margin within the golden ratio. So the next thing we want to look at is how old it is. We want it to be more than 5 years old, right? And the reason why is because more than 5 years gives us a lot of data to see what the trends are with this business. What does the revenue trend look like? What does the cash flow trend look like? And if you every business out there can have a great year, or even a great 2 years. But 5 years is enough to where you're starting to go through multiple cycles. And we want to see what that looks like. So we want it to be older than 5 years. We want the last 3 years to look like the trend is going upward. Now, there's a lot of businesses out there, especially run by people who are about to retire, where they're not trying to grow anymore, right? They don't want to grow because they're comfortable. And so the revenue might look steady. It might just look like this, and the cash flow looks like this. And that's fine too, right? Because they're not trying to grow the company. But if you see revenue and cash flow look like a yo-yo, just like this, that is worrisome for a couple of reasons. One, a lender's going to be very nervous to lend any money because they don't really know how much this thing really makes on a yearly basis because it just goes up and down. The second is for you, you don't know what that means either. You don't know if that means that this is a very cyclical business or if it's a business that has a really, maybe they're losing a lot of their labor force and have to constantly keep on hiring new people. And so their margins are all in flux, or they're really bad at retaining their customers. It creates a narrative that is not desirable. Okay. So we want things that are steady or we want something that's growing. Okay. And the last is we want the seller to be selling the business for specific reasons. And so if you see a business out there that's, the seller is 35 years old, like I am, and it's totally absentee, meaning he's not in the day to day, and he's selling it, it doesn't mean it's a bad deal. It just means that you really should dive into really understanding why this person is selling a business that's making them hundreds of thousands of dollars a year and it takes no effort on their part, right? Maybe they just want some to sell because they want a bunch of liquidity to go buy a bigger business. I've done that, so I know that it can happen. But you need to understand why. What we like to see is retirement because it's a very understandable reason. The person's in their 70s now. They want to retire. They want to be able to relax for the rest of their lives. And they've been able to slowly pull themselves out of the day to day. It's been around for a long time. It's a very established business. That we like to see that. Some of the other reasons why that the businesses are going to sell that are good reasons to buy, sadly, are divorce. A lot of times when that happens, because the assets are getting split, they have to sell the business, or it's going to be, sickness, which is it's sad where someone is older and now they have cancer and they need to let go of this business. And so you understand the motivation. The key here is understanding the motivation of why they're selling. If you feel that you understand it and it makes sense to you, then go ahead and continue down the path of acquisition. If it's something where it doesn't sound right, it just seems fishy, like this thing seems too good to be true, it's probably because it's too good to be true. And that's a lot of times sellers are going to try to hide the main reason. So hope that answers your question, but we kind of dove into some of the reasons there.
Yeah, that was great. Yeah, that was very educational and makes a lot of sense. W- Would you be able to kind of walk us through what the numbers look like on an average, kind of an average deal that you're seeing with your client, with your, the folks that are part of
Yeah.
your program?
Yeah. So I would say the average deal in terms of purchase price is going to be anywhere from just under 1 million. So probably 750, 800,000 on the lower end, all the way up to, I would say, 3 million usually as a purchase price. That's the average. Now, there's some people who purchase bigger, some people who purchase smaller, but that's the average. So let's just take an average deal of $1 million. Okay. Now, a deal that's selling for 1 million is probably doing around $300,000 a year in cash flow. Okay. This means after all expenses, the owner is taking home 300,000. So now when we come into a deal like that, the first thing we're going to do is we're going to look at the margins. Now, okay, what is it doing in revenue? Let's say this business is doing around 1 million in revenue. Okay, so it's doing around 30% margins. Good. It's over 5 years old. Yes. The last 3 years, the trend has been upward. Good. Okay, so now we're moving on to step two. The person's retiring. Awesome. Now we're going to look at how do we structure this deal. Now, there's something called an SBA 7A loan. Okay, so this is something that the government with the Small Business Administration what they do is provide basically a guarantee to lenders, to banks, to give out business acquisition loans, right? And so typically, if you're doing a non-SBA business acquisition loan, you have to bring about 25 to 30% of the purchase price to put down. And then you would you would pay off the loan over the next 7 to 10 years, the remainder. With an SBA, though, because the SBA provides this guarantee to lenders, the lenders are able to provide more leverage to the buyer because now basically the SBA is telling the lender, hey, don't worry about the 25, 30% down payment. We're going to cover an extra 15, 20%. So now the lender can say, okay, we can finance up to 90% because guess what? The government's kind of backing us. So if something goes wrong, they'll be able to make the difference on our underwriting. And so because of that, it now allows people to buy that $1 million business for let's say 10% down payment on their end. So that's 100,000. Now there's ways to do creative financing to where you can get that down without bringing on any outside capital. So no investor involved. There's ways you can structure the deal with the seller to now get down to about 5% down payment. So $50,000 to buy a company that's worth a million that's doing $300,000 in cash flow. So now we're down to 5%. Now, with the remaining 5%, there's a couple things you can do. You can put up the 5% yourself. You can bring on a partner who then puts the 5% down for you, or you bring on a totally passive investor who wants to bring the 5% in exchange for equity in the company. And so a typical structure for $1 million deal, we call it it's called the 85-10-5. 85% is funded by the SBA lender. The 10 is going to be a seller finance note. So the owner of that business becomes the bank for 10% of the purchase price. So if the purchase is a million, that's $100,000 that seller is saying, okay, you're going to pay that 100 grand with interest back to me personally, right? Over the course of the next 3, 5, 7 years, whatever you decide to do between you and the seller. And the remaining 5% is what you're bringing to the deal, right? You personally or an investor. So 85-10-5. And that is how that $1 million deal gets taken down. And after debt service, meaning the SBA loan you took out and paying the seller finance note, you're probably left with about $120,000 to $140,000 a year in cash flow from that $300,000 original cash flow of that business. And so if you put down 50K, you're now making back at least double your money in the first year. And so that's typically the structure that we're trying to go out there and do with these acquisitions.
That's amazing. That's amazing. Are the SBA loans structured over 10 years as well, usually?
Yes. So
Okay.
if it doesn't have real estate, now if a deal has real estate, there's a lot of small businesses out there where the seller owns the building, right, and the land. And if they want to sell the building and the land along with it, well, now you have a real estate transaction with the business transaction. And so with these loans, you're able to combine them together. And when you do that, if the real estate value is worth more than 50% of the total value of the deal, okay, so in that $1 million example, if the business is worth 400,000 and the real estate's worth 600,000, well, the real estate's worth more than 50% of the total purchase price. Now, instead of it being a 10-year term, it's a 25-year term. Okay, so now you've extended out, which means the cash flow, your payments are less every month, which means the cash flow is much better on that same deal.
Gotcha. That makes sense. Then your cash flow is better on the initially. That's awesome. And then with the original SBA loan, if it is over 10, the 10-year period, because it's just the business piece of it is the majority of it. Um, After those 10 years are up, the loan is paid in full, then the entire cash flow is then flowing to you as your family too. That payment goes away.
Yep,
Right.
that's correct. And
Yeah,
hopefully over the
that's
10 years,
awesome.
you've grown the business. So the
Yeah.
business should be hopefully at that point doing more than $300,000 a year in cash flow, even if you're growing it at a 5% to 10% per year. And then 10 years later, you'll have a nice exit if you decide to sell or continue on with the company.
Yeah. Yeah. You have a lot of great options. You're able to control like $1 million asset in this case that's producing $300,000 in cash flow for about 50,000 or maybe even less,
Yes.
depending on how
Right.
it's structured, which that's pretty mind blowing. That's a great. So yeah, thanks for walking us through that. And in your experience and what you've seen, do you have any preferences around when you're looking for businesses, whether they're local or remote? Um, any considerations around that? Do you like to be close enough where you can go to them, or does it just depend on the type of business? Maybe you can
It
tell us
does
more about
depend
that.
on, yeah, it does depend on the type of business. But I would say if you had to choose between buying a a business that's brick and mortar, right? So it has a physical location and it's you have a choice between local or not local. I would choose local if everything else was even, right? Because of course you have a better opportunities for building partnerships with potential customers and everything else if you're local, right? So I always recommend people start looking locally. If you can't find a local, there's a lot of people that are in our group that, they live in an area that has like, 10,000 people in that town. There's not many businesses for sale. And the biggest city is about 3 hours away, right? So that they would probably have to extend their search to that city. If the city didn't have what they were looking for, they extended to the state and then on so on and so forth. So I would say do concentric circles from where you are locally and kind of build your out looking for what meets your criteria because yes, it is easier if you are local. Also, a lender likes it more if you're local because it's less risky for them. They feel that if you're local, then you're going to have better opportunities to manage that business. But it's totally possible to not do a local deal. I've done multiple. Just but the more that you are not involved, the more that you are farther away, the more important that team that's managing it is super strong. So,
Yeah, that makes sense. And going back to the SBA loan, could you give us an idea of what are the underwriters that are looking at these SBA loans? What are they kind of looking for in someone that's buying this business? Are they evaluating it primarily based on the business performance? Are they looking at the buyer, some combination? Wh-
yeah.
what makes it kind of a successful, you know, underwriting package, for an
Yes.
SBA lender?
Good question. So yeah, it's both, right? So they're going to look at the end of the day, the business is the most important aspect because the business is what's paying the loan back, right? So now you are taking out a personal guarantee on that loan. So they are looking at you as a person. What is your experience? What's your background? What do your personal assets look like? Because they're going to collateralize the loan with, if you own a home, if you have 401k accounts, they're going to collateralize a portion of that loan with your personal assets. So if God forbid something goes wrong, then down the road they could claim some of those assets, right? Now, what is the likelihood we were doing through the stats that is it's more that's very uncommon, but if it does happen, that's what you need to when you sign that bottom line on an SBA loan, that's what you need to know. Now, the business is the most important aspect of the underwriting because at the end of the day, that's what's they know the cash flow is what's paying you back. So, the bank back. And so, yes, once they've kind of looked at you, your background, they'll check your credit score, like what are your assets. If you look good in their eyes, they're going to give you a thumbs up. Now their entire focus goes towards the business. How is this business going to pay us back? Is it a good business? What do we feel like this industry is doing? Where do we think that the runway is? And they're going to evaluate the majority of their time on that business.
Yeah, that makes sense. Okay, yeah, thanks for walking us through that. And let's say, all right, now we've got our business acquired. Um, Maybe we're in that closing period, or maybe even can walk us through what that process looks like to actually acquire one. And then looking at, okay, so now I've got one, and what do I want to do to make sure that the transition to me is going to be successful? We don't want key employees to leave. We don't want key customers to leave. It's going to be important that things keep going smoothly going forward. How do we
Yeah.
do that?
Yeah. So the way the process works is is we're going to start off with getting the deal under contract. Okay. So once you find a deal that you like, you're going to then talk to that broker who's representing it. He's going to have you sign an NDA. You're then going to get more detailed information. It's called a SIM, a confidential information memorandum. That's going to kind of list down the financial performance. It's going to list about who works at the business, how long have they worked there, some of the background. It's about 10 to 30 pages long. If that looks good, you're then going to reach back out to the broker and you're going to start drafting an LOI. That's a letter of intent. It's non-binding, but it's the first time you're putting something down to say, hey, I think that I'm going to offer $1 million for this business, and here's my basic conditions. And if the seller then looks at that and says, yep, I agree, he's going to sign it, and now you're under contract. Now, during this contract period, under contract, this is typically going to take around 45 to 60 days. And that is when you are starting the process with the lender. The lender is now asking for a bunch of documents from the business, a bunch of documents from you, and they're starting their process. And during that process, you're doing a site visit, you're meeting the team. If they're talking about the being open for the team to meet you, sometimes they don't tell the team that they're actually selling. And of course, you don't want to walk into a business where they don't know that it's being sold, and you say, "Hey guys, I'm the guy trying to buy this," and you can definitely cause an issue or two doing that. So if they're open to that, you're going to do a site visit. You're then going to go and start doing something called a quality of earnings. Now, the quality of earnings is where you're going to be going through the finances of the business. And don't worry, it's not you doing it, right? Most of us are not finance professionals. You're going to have someone who's a third party take those tax returns, those P&Ls, the bank statements, and they're going to reconstruct the cash flow analysis of this business to see how much money this business actually is making. Because a lot of times you're going to tell you, the seller's going to tell you, yeah, we make 250K a year, we make 350K a year. And then you go in there and you do a quality of earnings and you find out not really, they're making about $100,000 less, which is substantial, right?
Right.
Now, some of this is because the seller is not being honest, but most of the time it's because the seller really doesn't know how much they're making, which sounds crazy. But when you have a business that's doing multiple millions in revenue, you usually pay yourself a salary, so you know what you're making on your salary. But as far as like what is the actual profit every year, you're trying to hide your profit from the tax man to pay less taxes. And so when it comes down to how much you're actually making, it's not as clear cut as you would think, right? So that third party is going to tell you exactly how much money it's making. So then you feel confident. If I take on 800 grand in debt, I know this business is making enough money to pay that debt back, right? So you're going to do that quality of earnings. You're then going to do some legal diligence to make sure there's no lawsuits against this company. You're going to kind of make sure that everything's clean. And then you're going to go to the closing table and hope that all that worked out and the bank is good. They're going to set a closing date. You're going to wire the funds and the business is yours. And so that's kind of the process in a nutshell.
Do you remember doing your first deal and how you felt after you closed on that first one?
Yeah, so my first deal was not an SBA deal, right? My first deal was kind
Yeah.
of a sweat equity deal. And so it was a little different. So it wasn't involving a bank. It was just between me and the seller. But still, once you get that first deal done, I walked away with a portion of that company. I put $5,000 up. Um, it was it was a feeling of excitement of like, okay, now the work begins. But it was also like it's also you feel the weight of that responsibility. Like, okay, now I'm an owner of this business. I have responsibilities to doing the best I can to do right by me and my family, but also by the families who work for me, right? And
Yeah.
so that's a feeling you get when you jump into something like that.
And have you found that for those folks that are part of that silver tsunami and they're selling their, they're boomers and they're selling their business that they worked hard to build, do they kind of like the idea of working with a person to sell it to versus maybe selling to a, private equity firm or, where you can kind of say, hey, I'm going to take care of your employees and your customers and continue doing what you built in the community, that kind of thing? Is that important
Yeah.
to them or not as much?
No, it's definitely important to them. I think, but it's funny too because you would think that someone who is trying to sell a business, if a private equity firm were to come up to them. And for those who don't know what a private equity firm is, it's basically professional institutional level investors that get together. They pool tens of millions, sometimes hundreds of millions of dollars together, and they go out there as a fund to go and buy businesses. So they're buying it in cash, and then once they buy them, they kind of usually they buy a bunch of the same type and kind of put them all together, make one big business, and they sell that, right? That's what the model is. Um, but a lot of small business owners don't like private equity groups because it's one, it's an institution. They usually buy the business and then kind of fire a bunch of people and bring their own people in, which the owner, knowing that's going to happen, looks at all the people who've worked for him for like the last 10, 20 years, and he doesn't want that to happen to him, right? So it becomes, it's an impersonal thing. Whereas if it's someone like myself, that's just me, then and I'm going in there and I don't want to fire people. I want that team to stay intact because I want as minimal involvement as possible post acquisition. So for me, I'm coming in and I want pretty much nothing to change, right? I'm buying it because I like it. I'm also willing to work with the owner and make it to where the things that they care about continue on, right? Their legacy continues on. And so you
Yeah.
have way more of an ability to do that as a single buyer than you do as a PE group coming in, where you have the interests of 1,000 investors that you have to represent. So,
Think that's one of the things I really like about this model the most is that it really is a win-win for everybody involved. It really feels like that to me,
yeah.
which is awesome. Once you've acquired the business, what have you seen kind of work to really start to increase the profitability? Even if we didn't, that would be great. The numbers are great, but just imagine how much, more, more profitable that could be. What kind of tweaks have you seen or changes see happen or that people do that have actually gotten some really good results?
Yeah, so the biggest one is, and this is probably something that you all could relate to, but a lot of the businesses, like we talked about, are run by the baby boomer generation. So people that are now in their late 60s, early 70s that are looking to retire. And so most of the time, these businesses started 30, 40 years ago, right? And they started before the internet. They started before a lot of, CRMs and softwares for people to use and marketing tactics. So they're very old school. and it worked. And they built this great business that now is still working in a very old school manner. So you have a bunch of businesses that are doing really good profit that don't even have a website, don't have any kind of digital footprint, are still using pen and paper for taking customer orders. And so when you hear that, it does, most of us here, especially if we're on a Zoom call right now, you're doing a level of technology that a lot of these business owners are not even using. And you can think through really quickly of the things that you can implement that would make this business function smoother, more efficient. One of those is just having like a digital footprint, having a website. People can find you instead of just getting referrals, which is a lot of how these businesses grow. Now, when someone searches Google for plumbing, your name pops up, right? Because now you have a website. And so doing little things like that typically do a nice boost to the top end revenue of these businesses. And so little tweaks like that. So not we're not doing any kind of crazy turnaround type strategies or really aggressive marketing techniques. These are very just baseline. Do what it's doing because it's doing well, and just make it a little bit more polished and a little bit more 21st century.
Yeah, that's great. That's great. Well, Ben, is there anything else that you feel like we should know about the whole process or what it looks like to work with you?
Yeah, so I mean, like again, I think business acquisition is one of the best ways to build generational wealth, right? That's what I'm invest my time and money in, and that's what the people that I spend a lot of time with and helping them kind of go down that path themselves. And so again, my community is called Acquisition Ace. That's where I teach 2 hours a week and we kind of invest in other people getting started on this path. So that's where I spend most of my time on. And I think that if this is something that you're interested in, there's a lot of free resources out there for you to learn about this. Like if you go on YouTube, I've a bunch of content on YouTube. You can look up my name and I talk about what I do and how we do it. We go into more depth, way more depth than just what we did on this call. There's a couple other people out there who talk a lot about it. So I would say just take some time and spend a couple hours going through just what's free. And if it's something that you think is like really interesting to you and you think that this is something that you want to start to go after, then reach out. Reach out to me and my team and we'll talk to you and see if it's something that's good for you to do.
That's great. That's great. Thank you, Ben, for coming on and being a part of this. And yeah, just looking forward to partnering together going forward to help folks acquire some businesses and have a lot of fun stories along the way. And yeah, like Ben mentioned, if you're interested in learning more and want to figure out if you're a good fit, we will be sending out an email after the webinar with the contact information with a link where you can go ahead and set up a call with Ben or someone from his team and talk through your specific questions and really just figure out, hey, am I a good fit for acquiring businesses? So be sure to check that out if you're interested to do that. Um, and then I also wanted to just announce, I feel like it's super exciting. Personally, it's super exciting is just announce that as part of like an educational opportunity, but also just I feel like this is such a great opportunity that myself personally and my wife Bridget, we're going to go ahead and walk through this process ourselves. We're going to go ahead and acquire a business. And what we want to do is we want to just document our journey every step along the way. We plan to work with Ben and his team and just, again, just document what it looks like to start to research about a business, go through the process of getting approved for financing, all the pieces along the way. And where we're going to document that is in our Generous Life app. We have a community I mentioned at the beginning of the webinar called Kingdom Builders. So when we do send out the email with the contact info for Ben, we'll also include a link to the Kingdom Builders area. Just jump in there and then you can just follow along as things happen. Another thing I would love to see happen is some of you are interested in taking the journey yourself. Just jump in that community and share, ask questions, and move things forward. Let's track your journey and celebrate with you as you go through the journey. And maybe a group of us could do it together. I think that would be pretty exciting. We would learn a ton, and it never hurts to do these things together and not feel like you're just
Absolutely.
hanging out there by yourself. So anyway, we're super excited to get that process started. And yeah, please, you're definitely are invited to follow along, and we'd love to hear how what you're doing if you decide to go forward too. Um, Ben, that raises an interesting question. If there were two or three families interested in working together, have you seen like partnership agreements work?
Yeah, absolutely.
Um,
Yep.
yeah. So,
Yep.
okay. So
Absolutely.
there could potentially be opportunities to do that kind of thing as well. Anyway, so yeah, keep an eye out for those announcements, and we'll get the word out for those an email out to you about that. We'd love you to jump in that Kingdom Builders area. There's also just a series in there that would just help you grow spiritually if you are inclined to be entrepreneurial and looking at owning a business. So if you're on here, I think it would really bless you and encourage you on your journey. So hope you would, take part in that as well. It's called Called to Business is the series that's in there. You'll see it as soon as you log in. But keep an eye out for that link. And yeah, Ben, again, just want to thank you for coming on. Everybody, thank you for jumping on. If there's any parting words, any last thoughts, Ben, before we wrap up the webinar?
Yeah, first off, just thank you guys for joining. Thank you, Greg, for inviting me on. This was a lot of fun, and I think like in everything in life, this is a decision. If you decide to go down for a business acquisition, it's a commitment, right? It's gonna take a good amount of time and energy and focus to do one of these things, and so definitely spend some time in prayer about it. If you want to go and do it, this is not just like a whim of like, yeah, sounds cool, let's do it. Like really think about it, really pray about it. Make sure your family, your spouse is on board with you doing this. And then yeah, take one step at a time. So definitely I appreciate you guys taking the time today and listening. And like I said, if you're interested, reach out.
Great. Well, thank you so much, Ben. And yeah, thanks again, everybody, for jumping on. And yeah, we'll see you over in the Kingdom Builders area in the Generous Life app. And check
Awesome.
out our other affinity partners out there as well. I'm sure they'd help you either save money, make more money, or help you grow spiritually. So God bless you guys, and
All right. God
we'll
bless
see you
everybody.
soon.
Yep.
Bye.